behalf of Test Tooling Solutions Group, who is the premier sponsor, it is my pleasure to introduce John West, who is the Managing Director of VLSI Europe. He has over 20 years of experience in providing data and analytics related to the semiconductor manufacturing supply chain. His areas of interest include semiconductor test, related consumables, probe cards test, and burn-in sockets and device interface boards. He does have a Bachelor's of Science degree in Medical Physics from King's College and an MBA from Cranfield University. And with that, I'm very happy to turn it over to you, John. But
thank you for the introduction, Ira. Hello, everyone. My name's John. Clearly, this has been a very unusual year. The way we work, the way we live have changed significantly. Yet demand for semiconductors has continued to grow as normal, which means we are all very lucky to be part of this industry. And our greatest fear is at some point in the future, this luck will run out and the industry will crash. Or perhaps we worry the industry will go into another strong growth cycle and we have the fear of missing out. Either way, we need data and lots of it to help us predict these changes in the market so we can move fast and stay ahead of the competition. In today's presentation, I'll talk you through the numbers we normally use to measure or to check the health of the semiconductor industry. But clearly these are not normal times. So we need to take a look at other types of information, which will help us make some sense of the data. So what's happening in the semiconductor industry and what does it mean for you? Well, before we can answer that question, we need to be very clear about what we do know and what we don't know. And once we have clarity about that, then we can gain a better understanding of how we should be thinking about the future. So let's start with what we do know. So first of all, semiconductors. It's been a great year for semiconductors. It's beaten all expectations. I don't think anybody would have predicted that this year would be as good as it is. If we think back to January of this year, I think most analysts were forecasting a very good year for semiconductors, maybe plus 10% growth. But clearly, as soon as COVID struck, we all went very negative. And I think if you look at the industry as a whole, everybody was thinking this year was going to be strongly negative. So we changed our forecast in April from plus 9% to minus 4%, just because we didn't know what was happening. We were fearing the worst and we were being very negative. But I think it's quite clear that as this year has gone on, the semiconductor industry has outperformed everybody's expectations. So minus 4 was our forecast in April. Then we realized the market was coming in much better. So by May, we were looking at minus 2%. And then by June, we were looking at positive plus 2%. And now in August, we're forecasting this year to come in plus 5%. And we're still waiting for all the data to come in from Q3, but there is a possibility that this year could even be better than 5%. And I don't think anybody would have predicted that back in April of this year. So not only is the industry growing 5% this year or more, the long-term growth trend is back on track. And if you look at the data, it shows us clearly that one of the big drivers all of the big drivers for this industry are still intact. So big data, artificial intelligence has been a big driver. All of the companies that are involved in hyperscale data centers have been investing at record levels throughout the whole of this year. That's been a great driver for everyone. And then, of course, everyone working from home or working remotely. This has also driven strong demand for laptops, for displays, and other things. So this has been a pretty good year for everybody. The only negative that we saw was in the early stages was certainly automotive was down, and demand for electronics and semiconductors for industrials was also down. But clearly, as this year's gone on, even automotive is starting to show some kinds of recovery. So this year has just been improving all the way through. In fact, from the data that we have, this year is looking very normal from a semiconductor perspective. The seasonal quarterly patterns are intact, demand drivers are intact, industry is going very strong. Clearly, this is not a normal time, so supply chains have had some difficulty, but clearly, from the data we have already, this is turning out to be a normal year for semiconductors. The other type of data that we look at to help us understand the health of the semiconductor industry is chip prices. Now, there's lots of chips out there, lots of prices. So to try and get an understanding of how the industry is doing in terms of delivering price performance benefits that we would expect from Moore's law and that this industry has been able to deliver year after year, we created an index. So the blue line here is an index of chip pricing, and this is chip pricing that we collect on a weekly basis. And what this does is we have this index which measures the price per bit for memory and the price per clock speed per core for microprocessors. And we put this together into a formula which generates this blue line. So what we've been looking for in this blue line is that it should track, if the industry is tracking Moore's law, we would expect the blue line to follow the profile of maybe the green line, which is a 2-year Moore's law cycle, or the orange line, which is a 12-month Moore's law cycle. And what the blue line tells us that if the blue line is going up, it indicates that chip pricing is going up, which typically, historically, when we see chip pricing going up, it shows there is a under capacity in the industry, which means that chip makers can charge higher prices. And conversely, when the blue line is falling faster than the green line, then we would say that there is overcapacity in the industry and chip prices are falling. So we use this as a very good indicator to help us understand if there's overcapacity or undercapacity in the industry. So if we look at the data really from, let's say, from the beginning of 2018 to the end of 2019, chip prices were falling quite rapidly. So a lot of capacity was coming online, chip prices were starting to weaken, which caused the industry to go into a little bit of a downturn in 2019. But really from the beginning of 2020, chip pricing has been going flat, essentially. It's been really maintaining its price. All the way through this COVID crisis, chip pricing has remained relatively stable. So when we look at this, we think that chip pricing and supply and demand is at normal levels. So this year looks good based on this data set. This is data that we use normally to help us understand what's happening in the industry. Another set of data that we look at to help us understand what's going on is chip inventories. Now, again, there was a big worry this year that chip inventories were growing, but the data says something different. So this line here shows chip inventories in billions of dollars held by chip makers and also held by electronics companies. And it's growing slightly. There's a slight growth trend, but that's quite normal because as the semiconductor industry gets bigger, the value of inventory will also get bigger. So one of the things that we look at would be the inventory to billings ratio, which is around about 1.5. And that tells us that the chip makers have between 5 and 6 weeks of inventory. And again, that's quite normal. Nothing has really changed. Although you hear stories of everyone stocking up and the inventory is getting out of control, actually, the data says something different. It says there's enough inventory here. Sure, companies are moving from just in time to just in case, so they may be increasing their inventories a little bit, but it's not out of control. The other thing this data shows us is there is a seasonal pattern. So we would expect a peak in November, which is just before the holiday season, the big season for selling semiconductors, which is Thanksgiving, Christmas, and Chinese New Year. So inventories are usually at their highest in November, and that's what we would expect. And we would also expect inventories to be at their lowest in January. So when we look at what's happening, the way 2020 has played out, actually, it's following quite a normal trend. Nothing to be worried about here. Again, it looks like we have a normal year. And I can't say this enough, this is clearly not a normal year, but the data is showing normal for everything that we're looking at.
So John, with the so it's clear that from the data you have, the people are not building up chip inventory. Are people building up, let's say, finished electronic goods, or auto manufacturers? Are they sitting on more vehicles than normal, or is there, or are they actually, consumption is really tracking normal?
It's tracking normal. So I think what we may find is actually the chip makers are holding a little more inventory, and the electronics companies are holding a little less inventory. So when you add it up, it's probably equaling about what we would normally expect. Yeah, the inventory is a difficult one. I track the whole of the supply chain, not just semiconductors, but semiconductor equipment and all of the companies that supply all the subsystems that go into those. And it's quite clear a lot of companies are holding a little more inventory than they would normally have on the input side. But pretty much a lot of companies, as soon as they make it, it's getting shipped out of the door. So their input inventory is higher, but their output inventory is quite low. It's especially with semiconductors. As soon as it's made, it's being shipped pretty much. So that's something that we've seen. Yeah, there is some change, but I don't see anything that would be a cause for alarm at this stage of the semiconductor industry. There may be the odd company that it has too much, but overall it's looking okay. And this is something we track very closely. I would look at the data. So the last set of data we have is for October, which is down. I would expect inventories to spike up when the November data comes in, if this is a truly normal year. But yeah, it's surprised us. We were expecting inventories to grow very strongly, and they just haven't. Okay, so next slide. Another one thing that we would look at normally is utilization rate of semiconductor manufacturing equipment. Gives us some sense of whether the chip makers are running at full or low capacity. So this set of data here is showing test equipment utilization. So in 2018, it was a good year for semiconductors. Test equipment utilization was 96%. 2019 was a bad year for semiconductors. Semiconductors fell, say, 8 to 10%. Test equipment utilization peaked at around about 90, so that was a bad year. And here we are in 2020. Test equipment utilization is back up to 95%, which is normal. I mean, normally we would expect the utilization to average somewhere between 94 and 96%. So this is coming out right in the middle. Oh, and by the way, the industry has purchased a lot of test equipment this year. So it wasn't, the test utilization didn't go up because they didn't buy any new equipment. That's not true. They actually bought a lot of equipment this year already. So a lot of new equipment, a lot of capacity is increased, and 95% of that capacity is being used. So again, this is looking good from everyone's perspective. The industry is looking in good shape. So in summary, if we look at what we do know, semiconductor sales keep beating expectations. Every piece of data we're getting in is leading us to a slightly higher upside. We also know that chip prices are strong. We know that inventories are okay. There may be some areas that are, we hear about that are a little bit higher, but generally overall they're in good shape. And we know that test utilization rates are at normal levels. But I keep coming back to this. These are not normal times. So the way that we look at the industry may not apply. So this is what we know, but there are a couple of things that we really don't know about. And this comes on to the impact that COVID-19 is having on the industry and the way that the outcome of the US-China trade dispute may affect our industry. And this is unprecedented. We have two significant and unpredictable factors in play at the same time. And this is really where the uncertainty is coming from. How do you predict the impact of COVID-19? How do you predict the way that US-China trade dispute is going to play out? And these are questions that we really don't know the answer to. What we can do is that we can run scenarios, and I think everybody is doing that. You think of worst case and best case scenarios. That's all we can do, really. You can't predict these. But what we can say about these factors is that simply because they are unpredictable, we're looking really for something which changes the situation. I mean, it's quite interesting. This year is, despite these two factors being there, this year is playing out quite normally. Should we be worried? COVID-19, yes, it's had an impact on supply chains, but it really hasn't had an impact on demand so much. And the US-China trade dispute right now hasn't had too much of an impact to the end demand for our industry. Sure, it's changing, it's causing some supply chains to reconfigure, but the changes are slow and steady, and we can actually keep track of that, and that's okay. What we're really worried about is if something happens quickly, something which will cause a big change to our industry. And what we need to be able to do is to try and identify what will trigger a big change in this industry. And this is what the second part of this presentation is about, is really trying to identify a trigger event or events that are going to have a rapid change on our industry. But the problem is these are unpredictable. And a black swan event, if you like, I mean, it is unpredictable. And you'll kind of know it when you see it, but that doesn't really help you, because what we really need to do is make sure that we know it when we see it, and to make sure we see it at the earliest possible opportunity. So if you look at the data for the financial crisis, all the signs were there months ahead of when it really impacted our industry. So if you were looking at certain data sets, you would have seen that coming, or at least been prepared for something negative. So this is what the second part of this presentation is, to help you look at data sets that will help us at least see some change and give us a little bit of a head start over our competitors, and make sure that we stay ahead, move fast, and beat the competition. So what can we do? So most of the data sets that I spoke about in the beginning of this presentation are monthly data sets, and that's pretty good, but even monthly data sets can be up to 6 to 8 weeks out of date. So by the time we collect the monthly data and do our analysis, we could already be 6 to 8 weeks behind the curve. So really what we need to do is start looking at data sets that we get on a higher frequency, data that we can get on a daily basis or weekly basis. So that's one thing we can do. And the next thing is really to try and collect and analyze anecdotal information. Now, I know this isn't very popular, but actually there are a lot of clues in anecdotal data that we can collect, which may give us some head start on what's going to change, or something that's changing. So I would highly recommend that either you find anecdotal data sets or collect and analyze your own, which may actually give you some clues as to what's happening next. So let's look at the higher frequency data sets that are available. So chip spot market pricing is a good one. You can get these prices on a daily basis. This data set is just weekly data. and I've normalized the growth rates or change in pricing, normalized to 26th of July this year. The interesting thing about this is that spot market prices are typically very volatile. So it's very unusual to see this data being so stable. So if we look at microprocessors and NAND, chip pricing over the last 2 to 3 months has been incredibly flat. Again, very unusual to see this. DRAM prices have increased. Again, that's partly due to the hyperscale companies investing heavily. Also, more laptops being sold and so on. So DRAM, there's been a little bit of a shortage, so DRAM prices have increased. So again, when I look at this data set, this is telling me there's nothing to worry about right now. But what this data set will do is if something is going off or something is going wrong, these prices, all three of these indicators will drop very quickly. And if this drops very quickly over the space of 1 or 2 weeks, then we know there could actually be a problem coming. And we should probably be preparing for the worst. So this is a good data set for us to look at to help us understand if there's something negative coming.
Yeah. So John, but what if they spike? Is that then just, a constriction of supply? Or, I mean...
Yeah. So the way to look at this is, again, I wouldn't look at any 1 week in isolation. But if you see a trend happening over 2 or 3 weeks, then you know that there is something has changed. So this is what we're trying to find out here. Is as mentioned before, you're trying to identify a trigger event. So you may not be able to articulate what that event is, but you would see this as an early warning system, just one of many, that would say, okay, prices have spiked. And then that then causes us to ask the question why, and we can do some more investigation. And if at that point we realize that something is wrong, then we know we have to change our plans. At the moment, when I see this data, I don't see anything to concern me right now. So this is why you need to create almost a dashboard so you can see these indicators to help us make decisions, or at least help us to understand change. Because one of the problems we have this year is everything's going great. Most people's priority is just delivery. Customers are asking for products, we just have to deliver it. We're not really thinking about the big picture. So this is something that is useful for us to at least keep our eyes on the road ahead and not just focus on delivering what our customers are asking for us. So this data is showing we've had remarkable stability over the last 2 to 3 months. Another data set that we would use would be weekly chip sales. So this data is showing sales of semiconductors this week, this year, compared to the same week last year. So that's the blue line. So if that blue data is in the positive, it's telling us that this week, this year is better than the same week last year. And again, this data is really helpful in predicting what's happening next. So if we were to look at the left-hand side of that chart from December 2018 to June 2019, the industry was in decline. You could argue that the industry hit the bottom in May, June of 2019, and started to recover middle of 2019. And then the data started to become positive in January of this year. So this data is quite good in helping us understand when the market for semiconductors is turning. So we knew that in the middle of 2019, semiconductor industry had turned, and it gives us typically 6 to 12 months before the industry goes positive again. So this is a great set of data to help us understand where the industry is going. And clearly over the last few months, since COVID, the industry has been more positive than negative. There is a growth trend, which is why we believe this year can be easily plus 5% or even more. But really what we're seeing is this volatility. And I think this is what's really causing concern in the industry, is that overall it's growing, but there is volatility, which indicates, you know, a lot of companies just don't know what to do. But again, it's trending upwards. What I would expect is over the next few months, again, if that stayed in the red, then I would be concerned for next year. But right now, it's certainly heading in a positive direction. This is weekly data. So again, this gives us 52 data points throughout the year. So again, higher frequency data sets are very valuable. Another one is chip stock prices. Have to be careful about this a little bit, but you know, clearly this year has been a great year for chip stocks. It's been a great year for companies in the semiconductor supply chain. So the equipment companies have seen their stock prices grow, as have many of the suppliers of subsystems and test consumables. It's been a very good year for the industry. Yeah, this is good. But I think to really understand this, you need to look beyond the public data. It's helpful to look at you know, which companies are investing in, which investors are investing in which chip makers, and whether they're buying and selling and how much and when can actually give us a good understanding. So we could look at those companies that are professional investors in the semiconductor industry and look at what they're doing. So if they're all selling their stocks, then that may be a point for us again to just take another look at the industry and just check everything's okay or not. But right now, chip stocks are looking pretty good. So we can use these higher frequency data sets to at least give us some sense of what's happening immediately and not waiting for the news, the information to come through in the news. And then finally, we have this anecdotal data. This is purely subjective, but we're finding this type of data has a lot of value. So this chart here is what VLSI data, anecdotal data that VLSI research collect. So what we do, all our analysts, every week we get together and we have a discussion about all the things that we learn in a particular week. We speak to a lot of people in the supply chain, and the question comes up, how was this week compared to last week? Was it better or worse than last week? And if so, by how much? And we make a guess, and we think that maybe this week was better or worse. And we put it on a temperature scale, almost like a weather forecast. So anything above 21 degrees, the industry is in growth. And if it's below 21, then it's in decline. And this data set tells a pretty good story, actually. So if we look at the left-hand side, look at what happened in 2018. So January 2018, the industry sentiment or the industry temperature was 30 degrees. So it was hot. Everybody was feeling really confident at the beginning of 2018. But throughout 2018, confidence was dropping steadily and persistently throughout the whole of 2018. Yet, the semiconductor industry was having a great year in 2018. So if you look at the numbers, it looked like the industry was having a very strong positive year. But this data shows that confidence, for want of a better description, was actually falling throughout the year. So it was really predicting that 2019 was going to be a bad year, and that's exactly what we got. But I think what's interesting is that when we come into 2020, January of 2020, the industry was getting really positive. This year was lining up to be a really good year for semiconductors. Got off to a great start. Everyone was really feeling very confident. But already at the beginning of the year in January, the confidence was starting to fall, and we didn't know what that was. I don't think anybody did really, but there was something. I don't know what it was. But really, this is before COVID actually started to get in the mainstream press. It was a background story. It wasn't really that interesting. But already our data was showing that something had changed. And then, of course, as soon as it hit the press, everybody understood just how bad the situation was. Confidence fell quite rapidly. But the interesting thing is, by April, we can see that confidence really started to bounce back very quickly. And that's really quite remarkable, considering the situation we're in. And then by May, we were in growth phase again, and everybody's feeling quite confident. So actually, right now, people are feeling more confident today than we were back in January of 2019, which I think is quite interesting. So we speak to a lot of people. Out of about 100 people we speak to, maybe 1 or 2 are negative, but everyone else is being very strongly positive. So this would also be a very useful set of data to keep, to help us understand if something is going wrong. But again, so far, all the indications are this is going to be a great year for semiconductors.
So John, this is each of you on the VLSI team based upon what you heard, or is this a number of people you ask in industry to score?
Yeah, so all of the analysts in VLSI, we talk to a lot of people, and one of the questions we always ask is, how is business?
Right.
And what's visibility like? Has anything changed? And so far, everyone's being cautious, of course, but really everyone is seeing order activity is staying at high levels. They're all working at near quarterly record levels. Most people's concern at the moment really is about delivery. If there's a problem with one of their factories, if they get shut down, but those are the only real concerns we're seeing at the moment. I had someone the other day complaining that they only had 3 months order visibility. Well, I'd say that that is, even in a good year, that's all you ever get. So I'd take that as a positive sign. I mean, you hear the odd, the occasional conversation where companies have maybe pushed out orders a little bit or just changed the order volumes, but really nothing major. It's just been a little tweaking. So it's been everyone, almost without exception, all the people right from the materials to the subsystems to the test consumables, everyone's having a good year. And I haven't heard anything negative yet. But if we do hear something negative, it'll show up in here pretty quickly. So really, we've talked about some data sets that we can use to help us understand what's going on. So first thing I'd say is be cautiously optimistic. Business is great, but just be careful. You need to keep track of the usual industry health indicators like chip prices, inventories, utilization rates. They're solid indicators that help us understand the health of the industry. But as I said before, most of this data can be 6 to 8 weeks old by the time it's available, so maybe too late. We should be watching out for those trigger events. So we need to really pay attention to those data sets where we can get daily or weekly information. So chip pricing, weekly chip sales, stock prices are a pretty good indicator of that. And again, this systematic collection and analysis of anecdotal data, which we can all do. Every time you speak to somebody, just make a note. Did they sound confident? Yes or no? Should we be worried? Yes or no? And by tracking that over time gives us some sense of how the industry is feeling, what the industry sentiment is. And again, you really should be prepared for this unexpected events that may or may not happen. So some final thoughts. Clearly, semiconductors are going to play a key role in the future. And our role is to make sure we're still relevant and we are still playing a key role in the future. I think the worst case scenario for this industry would be a short, sharp drop with a fast recovery. You can look at what happened with the financial crisis. Okay, it was a difficult time, but it was pretty quick, really. 1 year bad, and then it was back to normal again. I think our best case scenario, and we shouldn't forget that, is that we have the sustained above average growth. Perhaps the industry has come to a turning point where actually we're just at the beginning of another strong growth cycle. People are changing the way they work. Perhaps this is the catalyst for more growth. But I think it's quite clear that as businesses, we need to be able to, in a position to ramp production up or down very fast. And to be able to do that, we need to make sure that we have the data so we can make those decisions quickly, so we can make the change quickly. So with that, I'll finish the presentation, and if anyone has any questions, I'll be happy to answer those.
Thank you, John. So if people would ask some questions in the Q&A tool, I'm happy to ask them of John. So while people are thinking about their questions, there's always this quadrant of what you don't know. I mean, we have a bunch of things that we'd like to know the answer about, but there's usually this, that fourth quadrant, the unknown unknowns.
Mm-hmm.
Is there any signs that we've been in this industry long enough that that's shrunk? I mean, or is there still a random event that could make a huge shift in what we're doing? I mean, and you look at COVID-19 as a huge shift, and at the moment you're not seeing the impact, but there could be other things, another Y2K bug or something,
Again, this if you look over history, there's always clues to a big change. They're there, but we just don't know. We're so busy, we're distracted, because business is great right now. All we care about is just delivery. We don't care about anything else. So we're taking our eyes off the road a little bit, but there are some clues there. So I'd say number one is interesting, the anecdotal data. When you speak to people, if they you can just sense something is changing. And again, you have this share prices, stock prices, another good one. If you, rather than actually look at share prices, probably look at the behavior of investors, professional investors in this industry, and watch what they're doing very closely. If they're starting to pull out of an industry that they are focusing on, then that there is something changing. These guys are not, these guys are very clever. They're always on the phone to the companies, to the companies they invest in. So again, they're sensing something of changing. So while we may not get much warning, if you pay attention to the data, you get a little bit more warning than your competitor. So the idea is that you can make a change quicker than your competitor, which means that you will survive this better than they will. So this is all I'm saying is that keep your eyes on the road. Look out for any clues that will tell us something is changing. And then once you've got the clues there, then you can start looking for that trigger event. And you can start to make your decisions earlier than anyone else.
Good. So a bunch of really good questions. Charles Shi asks, TSMC is recently in their earnings call highlighted their customers' overall inventory is and will remain above their historical seasonal levels. So you said the inventory level is not too bad, and understanding that you track the entire industry, and TSMC may only be a subset of it, but obviously not stated here is they're one of the biggest, they're probably the biggest player. So how do you reconcile the differences?
Okay, so there are two types of inventory. You have inventory on your input side, so all the raw materials you need to run your business. So yes, those inventories are higher, but on the output side, the inventory that you keep for your customer are very low. So if you look at the output inventories, they're actually quite low. So companies like, I guess TSMC probably has no inventories on the output side, but they have lots of inventory on the inputs, things like wafers and all the raw materials that they would need to run their business. They need to make sure they have everything they need to run their business. But as soon as they make it, they ship it. And it's the same with most companies. You make it, you ship it. But so yeah, it depends on which inventory you're looking at. So the question is, yes, Huawei may have a lot of chips. in inventory, but how many smartphones do they have in inventory? Probably not very many at all, because they're shipping straight to customers.
And I assume like TSMC, a foundry, I mean, everything's built to forecast or built to order. They're not building stuff that the customer doesn't want. So, yeah. I mean.
Exactly. And it's the same for everybody. I look at everybody in the supply chain. The thing that could really stop your business is the failure to get a supply of raw materials. So yes, raw materials on the input side are up a little, but on the output, things are being made and shipped straight away.
Got it. Okay, and a question from our colleague Jerry Bros. He wants to know, once a vaccine for COVID-19 is released, do you expect dramatic differences in the various sectors? If so, which would you expect to grow beyond, obviously, a growth in the medical sector? But what other sectors do you think are going to grow?
The answer is I don't know. And if you think about it, the sectors that are really struggling right now are hospitality and travel. And as those industries or those sectors come back into play, there's these people will have more money to spend, so they'll be spending on semiconductors, I guess. But I don't know. The thing I have noticed this year is that governments have injected a huge amount of money into the system. So while it's been a difficult year for many people, there's a lot of money out there, and people are using that to buy technology. So to answer one thing, I hope there is a vaccine, but I'm more skeptical about that. I mean, I don't know. I don't see anything specific, any specific sector that's really going to take off.
Okay, good. And a question for Mitsuishi-san. Is there any difficulty to collect data during COVID-19 that would influence data accuracy? You and I have talked about this, but you probably want to elaborate.
A little. There's no substitute for, and again, this goes back to the anecdotal data, is that there's no substitute for actually having a look at a factory to see if it's full, how it's working, those random interactions you have with people, joining the dots, getting information. I agree, that's been a little bit harder. But again, as analysts, we've been working really hard, having a lot more calls with a lot more people, putting a lot of energy into those calls to really try and get an understanding of what's going on in the industry. So yeah, those random interactions, that's the loss of those is a negative, but I think we're getting enough information to figure out what's happening.
Okay. And in your conversations with people, Christian Ellipse asks, what changes in companies' business continuity planning are you seeing, if you see this, dealing with new uncertainties like COVID? I mean.
Yeah, so one of the interesting things is that it's having an effect on capacity. So obviously, factories are having to, people working in the factories have to have more social distancing, which in effect reduces the capacity of some companies. So they're having to put additional shifts in. I mean, again, you'd have different shifts because of, you need to keep different bubbles. So if one, if one shift goes down, then there's still two shifts to carry on. So we're seeing a lot of reconfiguring of supply chains. And I'd say actually we're getting to a point where those companies that had a little bit of extra capacity are really running at full capacity now. So they've got a challenge. They need to invest in new capacity. And then the question comes, well, where do you invest in that capacity? Do you put it in China or somewhere else? So we're seeing a lot of discussions going on about, where to build their next factory, whether it's Malaysia or Vietnam or somewhere else, or even bring it back to the US or Europe. So there's a lot of talk, but I'd say that is the real challenge. Again, when I talk to companies, again, one of their greatest fears is that they have to shut down a factory or they have to shut down a shift. Then the question is, what does that mean for the supply chain? And yeah, that's why everyone's increasing the amount of raw materials inventory just to be on the safe side.
And are you seeing a greater propensity to have, their operations geographically dispersed, or we're going to stay at some of the historical centers in the semiconductor industry?
No, I think quite clearly the supply chains are reconfiguring. I think for some companies, they have no choice but to invest or put new capacity outside of China for strategic reasons. So, and I think everyone's learned the lesson is that you can't have all your production in one place. It has to be geographically distributed somehow.
Great. Okay. Well, fantastic, John. I think we covered all the questions, and I want to thank you for a great keynote. I want to thank our sponsors once again, our premier sponsor, Test Tooling Solutions Group, JDT Technology, our honored sponsors, our distinguished sponsors, NIDIC, SV, TCL, Smiths Interconnect, TSC, and Feldman Engineering. And our media partners, if you go to the website, you can connect with them. And then, once again, very appreciative of Test Tooling Solutions Group and their support of TestConX China. Thank everybody again for your participation today. Please invite your colleagues to join us and certainly provide us any feedback you might have. So I thank you and wish everybody a good rest of your day. Thank you.